Hi, I'm Lawanda Benefield, the principal owner of Lawanda Benefield LLC. And today I want to speak to you of 5 ways to avoid money mistakes that small businesses make. Please like this video and subscribe to my page. You can reach me at lbllc.net. You can reach me at Lawanda underscore your CPA on YouTube. I'm also reachable Lawanda Benefield LLC on Facebook and Instagram. Okay, so let's get into it and please bear with me because I'm using Ecamm and Keynote today. So let's hope this goes smoothly. So onward, march. So, 5 things I want to go over. The first one is mixing business and personal spending. A lot of small businesses make this mistake, especially in the beginning, that they don't separate business accounts from personal, nor do they separate business visas or MasterCards or credit cards. It's very important that you separate business expenses from personal because if you ever get audited, IRS will consider all transactions if you don't divide them. Also, it can make your business more like a hobby if you're not separating it and being more serious and very meticulous in your bookkeeping records. So please make sure that you have a separate business account, a separate business visa, and a separate business credit card account, and that you reconcile those monthly. And that goes back into the next bullet I have, which is ignoring book reconciliations. A lot of companies, especially when they're starting out, they do not do any type of management of their finances. So they don't look at what they look like monthly, let alone quarterly when it comes to income and profit, when it comes to losses, when it comes to expense analysis, also estimated tax payments when it comes to any type of reconciling item that's not clearing. For example, checks that haven't cleared, direct deposits that haven't deposited, or any reconciling item you may have in terms of payments you're expecting to go through or receive and you haven't gotten those things. You have to make sure you check and make sure that your bank account balance is correct in terms of outstanding items and pending items, as well as how much you're getting paid with your clients, with your accounts receivable, accounts payable in terms of how much you owe people, and not just your profit, but you also want to check and see where you stand on a quarterly basis. So the next item I want to talk to you about is misclassifying a contractor status versus employee. Some companies will do contractors and then they just and there's 1099, which that's fine, but then employees are W-2. But to avoid dealing with the whole payroll cycle, which is the withholding taxes, the employer and employee, the benefits, there's a lot of requirements as far as annual reports that you have to file, like a 940 and 941 that you have to do for payroll. And some businesses don't want to deal with this, so they just make everyone a 1099. That's not actually the way things should be done. Um, an employee is someone who's going to be working with you regularly. Contractor as well, but sometimes you bring a contractor in for specialty needs or for a temporary basis. But if they are more employees and you need to offer them benefits and you need to pay them a salary and not 1099s just to avoid the payroll, IRS can call you out on that and you can have a problem with that. Another thing that is a big area that businesses do not do, especially LLCs and sole proprietors, they don't make estimated tax payments um, on a quarterly basis, nor do they do any payroll withholding, which I mentioned earlier. You'll get in big trouble and end up actually owing a lot of money at the end of the year if you don't do estimated tax payments. So, what you have to understand is when you get a 1099, you are a company. And that means you're not getting taxes taken out. You have to pay your own taxes. So, some people love getting that lump sum gross payment amount, but it's all fine until the next year when you have to file your taxes and you realize, oh, wow, I didn't pay FICA or Medicare. I didn't pay anything. Well, you do need to pay. If not, they're going to come after you. And so it's best that you make estimated payments on a quarterly basis. That's usually every March, every June, every September, December, January timeframe. And these payments will go against any tax liability that you would owe the following year. Payroll withholding should be done on a quarterly basis, and that's very important per whatever state you live in. So you do not want to mess these things up, nor do you want to have any problems when it comes time for filing your taxes, or you're filing reports annually for payroll. The last thing I want to mention is not spending time doing year-end planning. Year-end planning is like, oh, what areas have I overspent? Or wow, I didn't realize that I don't have receivables collected in the past 6 months. Or hey, I owe this bill. I had no idea I hadn't paid it. Or wait a minute, my cash flows, I thought I stood in a better position. No, you want to make sure you know where you are. You want to know, start planning your budget for the following year. And you have to look at your seasons because cyclically you might collect funds big time between the middle of the year to the end of the year, and you may be very slow the first part of the year. Well, you have to manage that and learn how to keep your business constant, so there's things like that that you have to be considering, as well as growth. You may be trying to grow or you may be scaling back. It depends on what your company's doing, but you have to analyze where you are. So these are just a few tips I wanted to offer to you that I can speak to you about. If you want to contact me to help you with your needs, you can reach me at my, like I said, my website, lbllc.net, number 410-266-7145. I'd be willing to speak to you. Thank you so much for listening to my video. I hope you have a fantastic afternoon and evening. Until the next episode, bye.